Hi, good morning everyone. This is Richard speaking. So today our webinar will be a little short. What we'll be going through is the results of the companies under our coverage from last week, which is SIA Engineering and SATS, both of which are from the aviation sector. This is our usual disclaimer. Please read it. Okay, so before we start on the update on the two companies, I'll just go through a little bit on the operating data for Changi Airport in 3Q this year. So there are actually three main operating numbers to look at, which is the aircraft movements, passenger movements, and air freight volumes. So you can see for 3Q this year, year-on-year, 4.7% growth for aircraft movement. Passenger numbers also up 5.8% in this quarter, year-on-year. Whereas air freight is down 1%. One thing to note for passenger movements, as you can see here in the comments, for 3Q of this year, we saw the highest ever passenger traffic in any quarter. This was boosted by LCC passengers. LCC stands for low cost carrier. Among these passengers, Chinese passengers saw the strongest growth with 14.9%, and our largest market, which is Indonesia, declined 0.4%. Now, if you look at the right side here, this is for the first 9 months of this year versus first 9 months of the previous year, which is 2014. So same on a 9-month basis, year on year, aircraft movements improved 0.8%, passenger movements up 2.1%, whereas air freight is down 0.2%. The thing to note between here, the 3Q growth and the 9-month growth, if you see that 3Q growth here is in this case 4.7 and 5.8, the growth is higher than 0.8 and 2.1. How you interpret this is that the growth in 3Q was actually better than the first 6 months. So first 6 months was probably in this case here, first 6 months growth for passenger movements was less than 2.1%, and so the third quarter 5.8% actually lifted it up to 2.1% for on a 9-month basis. Here, these three charts are the historical time series for each of the three operating points that we look at, which is the aircraft movements, passenger handled, and air freight. So what you need to take, so the blue bars are those numbers, while the orange line shows the year-on-year growth for each of the quarters. So what you need to pay attention to is the orange line here. So for commercial aircraft movements, you can see that it has experienced about 3 or 4 quarters of negative growth. This is the zero here, and in this quarter here we have 4.7% growth. So it looks like things are bottoming out for aircraft movements at Changi Airport. Likewise, for the passengers handled, you can see this is 0% growth here. Roughly about 3 quarters of negative growth. 2Q we saw a bit of positive growth, and now in 3Q 5.8% growth in the passenger handled as well. So this roughly also ties in with our report from 2 weeks ago on the hospitality sector, where we think that the bottom actually has we think we might be seeing the bottom as well. So yeah, anyway, one thing to note for passenger movements, the difference between passenger movements and international visitor arrivals. International visitor arrivals are actually the tourists that are coming into Singapore, but for passenger handled, this includes passengers who are on transit, so on transit in Singapore. So maybe they come from Australia, they transit in Singapore and carry on their journey to maybe Japan or Europe. So you will see that the passengers handled, the numbers will be a lot bigger than the actual visitor arrivals, because those are the passengers who are disembarking and clearing immigration at Singapore. Okay, so moving on to the actual companies under our coverage that announced their results last week. There's firstly is SIAEC, so we have a reduced rating on it, target price 346. So as you can see, revenue here was down 6.7%. This was due to lower airframe and component overhaul and fleet management, but it was mitigated by higher line maintenance. So if you have been following this company, the last few quarters, they have repeatedly announced weaker revenue for airframe and component overhaul. This is due to the newer aircraft having an extended maintenance cycle, so they don't need to go to the hangar for their overhaul as frequently as the older aircraft. Next is EBIT. So operating profit was higher by almost 70%. This was attributed to a decrease in subcontract costs, staff costs, and material costs. So in 2Q 2015, there was actually an abnormally high subcontract expense. And so what management has said in this quarter is that this new So what has happened is that management has guided that the current subcontract expense that you see now is the normal expense to expect going forward. Next, associates and JVs. So same as the last few quarters, they have a decrease in engine repair and overhaul. Their associates, the JVs they have two JVs which deal with the Rolls-Royce engine. So the two JVs are SAECL and IECO. So there's been a decrease in number of engines throughput, and that's the same for their Pratt & Whitney associate that's called Eagle Services. So this is the cause of the lower associates and JV contribution to the bottom line for SIAEC. So what's happening now? I'm going to go through this first bullet point. So for the line maintenance segment to stabilize group revenue, what's happening is that there will be a trend where more of their revenue being recognized will be towards the line maintenance instead of the airframe and component overhaul. This is because now with the new aircraft, less maintenance actually is being carried out in the hangar, and then some of it will be carried out on the apron side as well. So this would result in revenue being recognized for the line maintenance segment. Second bullet point is on the JV with Boeing. It's called BAPAS for short. So what this JV is SIAEC has entered into a joint venture with Boeing. Is to do a point of sales fleet management program. So when a customer buys a Boeing aircraft, they will try to package a maintenance fleet management program together with the aircraft. So it leverages on both the Boeing OEM as well as SIAEC's experience in doing maintenance jobs for aircraft. What this is for FMP, this is more of a lower margin business, but what it serves as is a gateway to channel work to the other associates and JVs within the SIAEC group that have a higher margin. So the fleet management program, what it does is they will kind of like monitor inventory levels and monitor the maintenance schedule for the aircraft and try to tie in the various components and take the aircraft offline and do a few items at one go and to optimize the time spent offline. And this and so the work done will be like component overhaul and repair, and these items will be sent to the various subsidiaries and JVs within SIAEC. Last bullet point, engine still problematic. So as I explained earlier, associates and JV, this is being impacted by Rolls-Royce and Pratt and Whitney. Pratt and Whitney, one of the engine type also, they are slowly phasing it out as well. But for the new engines, we expect them to start coming into the workshops in FY17 and continue to ramp up to the steady state probably in FY18. This is an estimate. However, we don't think that the associates and JV, the contribution by associates and JV line in the P&L, we don't think that at the moment we are not optimistic of it actually regaining to historical levels as what it was in the past. Okay, moving on to SATS. So SATS has two business segments, which is food solutions and gateway services. And if you split it up into two industries, there's aviation and non-aviation. So food solution, aviation, that is the in-flight caterer at Changi Airport. Food solutions, non-aviation will be places like the Sports Hub and SFI, which does catering for the SAF. The other one is gateway services. So the aviation gateway services would be passenger handling, cargo handling at Changi Airport, and the non-aviation gateway services is the cruise center. So, okay, so looking at this line, food solutions, revenue was down 9.2% this year. The explanation for this is a transfer of 29 million of revenue to SATS BRF JV. So 2 or 3 quarters ago, SATS announced that they are going to a JV with this company called BRF Food. So what happened is that they would transfer the food distribution business within SFI into the JV. And next is $5 million lower revenue due to the weaker Japanese yen from TFK Corp. TFK Corp is their Japanese subsidiary, food in-flight catering subsidiary based in Tokyo, which operates out of Narita Airport and Haneda Airport. And lastly, they recognize lower 2.2 million due to the divestment of Urangan Fisheries. So this did not contribute to their top line in this quarter as compared to 2Q15. So to sum up, revenue this quarter was 4.4% lower due to lower food solutions but higher gateway services. EBIT up almost 40%. This was due to cost control and productivity improvement measures. Associates and JV was up 10.2%. They reported growth in both their gateway and food solutions associates and JVs. So just to clarify a little bit here, for revenue, there's food solutions and gateway services, but they also have associates and JVs engaged in these two same business segments of food solutions and gateway services. How the business operates is when they want to do inorganic growth in other geographies, SATS has to tie in and do a partnership either through associate or JV with the existing license holder. It's not possible for SATS to go in and be the sole license holder. They need to do a partnership with the existing license holder. So that is the landscape of how inorganic growth is for SATS. And lastly, PATMI was up 26%. So let's look at the bullet points now. So first one, lower food solutions revenue. As I explained earlier, the SFI food distribution business was transferred into this JV, and that's why there'll be lower food solution revenue being recognized from this point onwards. Second thing, during the briefing, they gave some comments on their bulk acquisition. This is Brahim's Airline Catering Holdings. It is a subsidiary of it is the food subsidiary of the parent. So BARC is actually the leading in-flight caterer at the KL International Airport, and it actually has the strong market share there with MES as its base customer. At present, what we see for positive catalyst is the contract between TFK Corp and Delta Airlines. So earlier this year, they announced a contract with Delta Airlines to provide in-flight catering at the two airports, Narita and Haneda. In addition, actually, Delta will be closing their flight kitchen. So in that sense, you can expect some customer stickiness. However, what we are looking at now is that the contract value, the reported revenue for the contract looks a bit inflated, and so we would like to see at least 1 or 2 quarters where this revenue really does get recognized. And so this TFK Corp will actually start contributing in fourth Q of this year. Lastly, downside risk. So if you have been following our research with the hospitality sector from 2 weeks ago, you know that we are actually starting to get a little bit optimistic on the recovery of the hospitality sector, and we are also looking at some growth momentum in flights at Changi, which I showed in the first slide just now. So the downside risk is that this momentum is not sustainable. Okay, so okay, I've spoken for almost 20 minutes already. Now I've come to the end of the presentation, and we'll await your questions. Actually, I already see one question. The question is, what is the impact of oil price to SIA Engineering? Okay, so direct impact, there isn't much direct impact because oil price isn't one of the large expense contributor. But how oil price can impact SIA Engineering is that with lower oil price, if airlines take advantage of this, they may increase their fleet size, or those aircraft that are being parked in the desert, mothballing away now, they may bring them out of the desert and put them into circulation, and so that will contribute to a fleet size increase as well. And so with a fleet size increase, then directly how it can impact SIA Engineering is that obviously the line maintenance revenue would increase with each additional landing. Hi, there's this question on SATs. Share price has been well supported since its inclusion in the STI index. Based on your data statistics, is this momentum sustainable and further upside to come based on fund managers and index funds buy-in? Okay. Yeah, so as I've mentioned earlier, so now downside risk is whether the momentum uh, can be sustained or not. Further upside, as I explained, positive catalyst coming from TFK Corp. When they start recognizing this revenue, we'll get some clarity on the extent of the revenue recognition for that contract with TFK. As of buy-in by fund managers and index funds, we can't comment because we are not them, so we don't know if they're going to buy or not.
Hi guys, Leow here. There's a question on first read, whether we cover first read. We do cover first read, but is there any particular question you want to know about first read?
There's a question on cash uh, share placement X. What's the benefit of the recent share placement exercise? Actually, the placement will result in some dilution for existing shareholders. There's another question on SATs. Do you see food solution sector will improve for next quarter? No, because one part of the food solutions business that have been contributing revenue has been transferred to the joint venture with BRF. So um, logically, you would expect to see another 3 more quarters of lower food solutions revenue. However, this will be offset because uh, whatever that does not appear in the revenue line, by right, it will it should be accounted for in the associates and JV line. There's a question, any comments on partnership with SingPost? Is it a positive catalyst? Well, yes, it can be, but the thing is that having a facility is one thing, but the utilization is a different thing altogether. So if you look at this current slide here, air freight being handled at Changi Airport, um, actually it fluctuates quite a bit. The year-on-year growth historically fluctuates between 2% and -2%. So even if it is a positive catalyst, it doesn't look too exciting. The I would say the more um, key catalyst would actually be the revenue from TFK Corp and a sustainable momentum in passenger handled and flights coming through Changi Airport.
Hi, this is Peter speaking. There's a question on the um, any property counter that will benefit from the G2G project between China and Singapore. So, for that wise, the G2G project is relating to Chongqing. So, there's one large cap company that comes into mind, that is CapitaLand, because of this Chongqing development in Chaotianmen that they have, that is slated for TOP in 2018.
Okay, so since there are no more questions, we'll end the webinar here. Please tune in again next week. Thank you.